Good morning, everybody, and welcome to the latest SFI Live with me, Jay Evans, your host, Holly Andrews, and Tony Hall from Saffron Builders. So we'll do introductions in a second. Reminder for those of you who haven't joined us before, this is an interactive webinar, so the chat box on your right, you can ask your questions as we go through. We will get around to them as quick as we can. They do come in quite fast sometimes. We'll get there as quick as we possibly can. Any comments you've got, obviously leave them in the box. And if you need any feedback on anything, just drop a comment in there as well. So before we go any further, let's do introduction. Tony, do you want to do a brief introduction?
Yes, certainly. Hi, I'm Tony Hall, Interim Head of Mortgage Sales. I've been with Saffron now since July last year. And my role covers off intermediaries. It also helps support our existing customers and also our Saffron Mortgage Finders, our open market advisory option.
Excellent. And over to Holly.
Morning, I'm Holly. I'm the intermediary team leader, so I look after our team of telephone-based BDMs. And I've been at Saffron for 6 years now and in the mortgage department for 5. So yes, we're a small team of telephone-based BDMs, but watch this space because we are expanding as well.
We'll talk about that a little bit later on. We are here today to talk about the buy-to-let range as a whole. So we'll be talking about, obviously we're going to talk about first the new limited company buy-to-let as well. So we'll go into detail about that. If you've got any questions to go through, as I say, just pop it in the chat box and we will get back to you. If we can't answer any questions today, we will ask for your contact details and we'll come back to you if we can't find an answer for you during the call. So we'll kick off. Shall we kick off first by talking about the limited company buy-to-let products? You were in this market before, you left it, you've come back in. Why, Tony?
Why we came back in?
Yeah.
Why did we leave? Or why did we? Yeah.
Yeah. No. Why did you come back in?
We came back into buy-to-let back in October of last year, and that was just again, I suppose, reminding ourselves of how good we were in it and building up our capability. So we came back in with our expat and our standard buy-to-let product. And then an obvious home for us was the limited company buy-to-let, which we had previously. So we wanted to bring that back in as soon as we could. And we kind of dusted it off what we did before, had a look at what worked, what didn't, made a lot of changes, launched our new range, which I'm delighted to say is hitting the mark. We're getting a lot of inquiries and a lot of business. So yeah, delighted to be back in the market.
Excellent. So we're going to go through a few questions that you've had regularly, Holly, with your team. Is there a lot of paperwork involved in the limited company buy-to-let, and what will the brokers need to get from their clients?
Yeah, so there is, as with all our documentation, it's all uploaded through our mortgage portal because we are completely online. But the documentation that you'll need for each case will be proof of address, proof of ID, proof of income. And also for the limited company, you'll need the certificate of incorporation. You'll also, if they've been running, as the SPV's been running for more than 18 months, we'll need to see the first years of accounts. And then there is 2 other documents that are listed on the website. So personal guarantees from all the directors and also a resolution of the board of directors. But those 2 are drawn up by their solicitor. So although it looks like a requirement from the outset, it isn't. And we do allow portfolio landlords on this mortgage. So if they are a portfolio landlord with 4 or more mortgage buy-to-let properties, you'll be looking for the business plan, the cash flow, personal assets and liabilities form, and the property portfolio form. But again, all of these can be found on our website under the supporting documents section. So it's pretty standard as what's needed, but all the guidance that they'll need on that is on the supporting docs area of the website.
You did just briefly contest this, Holly, but this is a next question. Yeah. How long does the limited company have to be certified for?
So they can be set up from day one. So as long as we've got the certificate of incorporation, that can be from day dot that will take them. And again, if they've been running for more than 18 months, then we'll just need to see that 1 year of accounts. What we stipulate for a limited company buy-to-let application is that limited company is set up with the sole purpose of holding property. But what we don't do is we don't restrict the SIC codes. So as long as it falls into the category of only holding property, then that's okay. We don't restrict it to like a few SIC codes. It gives us a bit more flexibility with the product.
I do apologise. Sorry.
Bless you.
Sorry about that. I didn't know where to turn. I'm sorry.
Let you off on that one. Okay, Roy's coming with the questions. I'm going to go straight to it just because we need to clear this up. Why do lenders and buy-to-let insist on guarantees from directors, not from the shareholders? Do you not understand the difference?
So actually, Roy, with our product on this, we stipulate that all shareholders must be named as directors. So for us, that's what we'll be looking for, is the personal guarantees from the directors, because if they are to default on the mortgage, we will ask the directors to pay and look at the arrears. So our real key thing would be that they are I've lost my train of thought. I do apologise. So for us, it will just be making sure that they're set up correctly and all shareholders are named as directors. On any application, it will be 4 directors maximum.
Okay, Roy, I hope that answers that question. Private question here, so I won't say the name. Do you accept CBTL previously in a trading company, which now has changed to a SPV?
So we don't consider consumer buy-to-lets or regulated buy-to-lets on our limited company. However, we do offer consumer buy-to-lets and regulated buy-to-lets on our standard buy-to-let range. So although we can't fit them within the SPV limited company, we could potentially look at them on an individual basis if that's what they were looking to do.
And LLPs, there's a question from Philip.
Yes, we can consider.
Okay, brilliant. Questions coming in, so I'm going to stick with these questions for a minute before we go back to ours. So it's from Darren. Do you have a maximum number of properties that portfolio landlord can have that's just as a sole trader or limited?
No, so for us, our portfolio landlord criteria, and I think this is one of the things that we, when we're discussing with brokers that we do speak to, is one of the great positives with our portfolio landlord criteria. So the applicant can have unlimited properties in the background, whether that's held in a personal or a limited company name, but all they'll need to do is be able to cover at least 125% of their product pay rate, both individually and collectively. What we are working on is our property portfolio form is on our website, but it's in a PDF document. So one of the things that we are changing shortly, fingers crossed next week, is that you will then have an Excel format that will help you work that out. So you can transfer the data in and the formula will already be there to calculate it for you. That's what it should be there to do. So that's a slight change you should see next week.
Okay. These questions are long, so bear with me. This one, a number of larger portfolio customers often have other owned companies as shareholders in the SPV. Would this be acceptable? Also, what about minors being shareholders, e.g. kids having a small shareholding in the company?
So for us, it's that we like to keep the limited company buy-to-let simple. So looking at the limited company buy-to-let setup, all shareholders must be named as directors. So minors on the application as a shareholder wouldn't be acceptable. They would have to be a director. So due to their age, they may not be able to. So if it's through a holding company or there's another trading name associated to the setup of the directorship, that's one it's always worth running through to us because we need to know the complexities, who's involved with it and things like that. But it's the key thing for us is we like to keep it simple and have that criteria available. But anything that's sort of complex with multiple shareholdings, other holding companies, just give us a call and we're always happy to chat through and, we can look at Companies House and really get to grips with it. If not, we can, as we always say in our webinars, we work really closely with our underwriting team. So we can always have a chat with them if there's anything that's confusing us or anything that we need assistance on, just to really get their lending decision pre-submission.
Okay, James, you're saying you can't hear the webinar. There is a reset button. Just click the reset button. You won't be kicked out. It'll just reset your connection. It should resolve the sound problems if you could hear me saying that. I will put that comment in there as well. There's lots and lots. I think it was pretty much covered by what Holly said. I think you seem to really want. I think we'll go back to that a little bit later on with regards to directors and shareholders. So from payment, how does the stamp duty get calculated on limited company buy-to-let? Some solicitors are saying the directors are liable and levy can apply, and some say if the director is FTB, then they can preserve the FTB if purchased for a limited company buy-to-let. Yeah, that was quite a long one.
No, I did. So I think that's quite a complex one and probably not a question that we've come across before. What I would say is, that the stamp duty is down to the solicitors and the legal advisor. We wouldn't necessarily sort of be able to give advice on that, but we can certainly have a look at it prior and see if our underwriters have an even aspect of it. And we'll certainly take your details and contact you after the webinar and maybe we'll send it out to everyone just so they've got that information.
So Payman, if you want to have direct contact, then you can send a private message in the box to me with your details and I'll pass them on to Holly. Just while we're on that, first-time buyer came up in that question. Do you lend to first-time buyer, first-time landlords?
Yes, we do. So that's one of the fantastic things since we've come back to limited company. When we had it before, it was for homeowner occupiers, but we've actually managed to expand it to really match our range. So for the buy-to-let and expat, we allow first-time buyer, first-time landlords. And again, with the limited company buy-to-lets, we do allow the first-time buyer, first-time landlords on there too.
With the complex issues regarding shareholders and directors, I think that's a conversation that we should have directly with you. So if you want to leave your details during this webinar, the private message, payment, I've just got yours, thank you. Send it through on the chat as a private message and I'll pass those details on and you can have a direct contact with Holly and her team and we can get those questions finalised for you. Again, James, that falls under the same category. So just very quickly, you did answer earlier, this kind of question come in, but do you lend to HMOs? You do, don't you?
We don't, not at the moment. Tony, I'll let you speak, sorry, on HMOs.
Yeah, no, we don't currently. It's under review. Clearly, we're always looking to broaden our portfolio of products within the buy-to-let space. So we'll, as soon as we can do it, we'll let you know, basically.
Let's just quickly move on very briefly just to income. Is there a minimum income required? What's the income?
Yeah, there is a minimum income requirement. So for limited company buy-to-let, it's 25,000 on any application. That can be made up of a mixture of other background rental income that's showing on your recent tax calculations. It can be from working income, or it also can be from retirement income too. So it's a real mixture. And again, the 25,000 is another part of our sort of blanket range of buy-to-let. So buy-to-let and standard and expat buy-to-let, you have a minimum income requirement of 25,000.
Great stuff. Let's move on away from limited company for now and move on to the rest of the buy-to-let range. We have had a question previously, and let's just clear this up now. On expat, Tony, expat buy-to-let, we now can't lend to anybody in the, I always get this wrong, European Economic Area, isn't it?
Yeah, EEA, yeah.
The rest of the world. But I mean, I was having this conversation with somebody the other day. The majority of expats that make your product so successful come from outside of Europe anyway, doesn't it? So what are your primary countries you get the most interest from an expat?
We get a lot from Australia, the States, South Africa, but we do get a broad spectrum from across the piece because we don't have any country restrictions, obviously outside of the EEA. Unless it's a sanctioned country or something like that. So we are extremely open to that, and that's probably where 85% of our expat lending comes from.
Just going back to the questions that are coming in again. Sorry, Holly, this might be for you again. Would you do LTV now then?
So on a standard individual buy-to-let, yes, we can do let to buys. We can help with both the buy-to-let, and we've got some great residential rates at the moment as well. On a limited company, we won't be able to because they would be considered as a consumer buy-to-let by our definition. So therefore, we wouldn't be able to help on the limited company side.
From Suntalk, do you lend to buy-to-lets above or next to takeaways or hairdressers?
So no, for us, if it's considered high risk commercial, so you're looking at restaurants, cafes, hairdressers, we wouldn't. But if it's anything else, such as an estate agency, a library, then those are kind of have less customer traffic flow and less high risk materials. So those are the ones to refer over to us. But if there's any questions on property or anything like that, we're always happy to have a look at them online and check them. So just give us a shout because, the team are all available.
Okay, from Darren, I know the answers, but Holly, I'm going to put you on the spot again. Would you lend on an ex-council high-rise, or do you have a maximum number of floors? If so, do you have a requirement for the number of, I think especially flats that have to be privately owned?
Yeah, so we don't lend on the ex-local authority high-rises, but we can look at ex-local authority flats. It's 75% on repayment and 60% on interest only. There should be no deck or balcony access within the property at all. So if there's any within the property, we won't be able to consider. But if it's, say, for example, 7 or 8 floors, or, but this goes for any flat. If there's 7 or 8 floors, any more than that, always refer it over. because we're always happy to have a chat with it. And again, it's really highlighting on the underwriter's point is that we can make those exceptions and talk to them about it. So there is no set within our policy, there is no set amount for how much should be privately owned.
Okay. So Payment's back again with another question. Can you please explain how you deal with cladding? EWS 1 form, is that required for all flats with cladding or anything above 18 metres?
Yes, it is. Within our policy, we do stipulate we do need the EWS 1 form for properties with cladding or above the 18 metres.
Okay, James, just elaborating on your high risk commercial properties underneath. Is it footfall rather than dangerous chemicals, i.e. hairdressers, or smell, as in takeaways, that govern decision on flats above commercial?
It's actually a bit of both. You know, it's taking that view of it. You know, they've got the high risk chemicals, but also there's a lot of traffic, and you know, properties, there is a limited market of people that will want to live next to a takeaway or above or in close proximity. So, you know, it does limit the market, and that's the key thing that we will look at the security and how it could be affected in the future.
Something I have brought up before actually is a question, and it's just coming again from Lisa. I think that's how you're saying your name, sorry if not. Any thoughts of moving into holiday lets? I'm doing a number of holiday let limited company holiday let deals currently. Tony?
Yeah, I'll take this one because I can answer it, which is good.
I'm getting to know which one you can answer now.
I know it all. I'm just testing Holly. See, that's the key bit about it. Oh, don't put me on the spot. No, we are looking at this at the moment. We recognise it's a big opportunity, and it's an area where our partners are telling us we could be helping. You know, there is some supply of obviously lenders doing this in the market with varying degrees of what the market wants. So we're currently going through a project to understand what our product needs to look like, and I'm hoping by, you know, potentially end of this quarter, early next quarter, we have a product out there.
I hope that answers that question. That's good. Just don't forget, guys, if you do want to put a question into us, I notice there's some people joined us now. So if you do need to send a question in, box on the right hand side, pop in the question, mark it as a question. We'll get through to it as quick as we possibly can. We'll put those to Tony and Holly. I'm just going through them now just to make sure I haven't missed any. No, I think we've answered all those ones. So sorry, I'm just completely distracted. I lost people there. Tony, just talk about the SLT holidays. The question that come up before I came on the webinar. Obviously, there's rumours they could continue or could be extended, but only by a matter of weeks. How has that affected the buy-to-let market in the UK since we've had the holiday?
Well, I think it's certainly propped the market up, or, you know, in terms of people wanting to take advantage of it. So I think there's far more demand for property, and I think, you know, the supply, we haven't had any supply issues, but obviously the processing and the stress not only on the lender but the ancillary, so the surveyor and the solicitor, etc., as a result of the increase and the pandemic, is obviously affecting service levels and affecting the ability for, you know, for borrowers to meet the deadlines. Hence why the lobbying to see an extension.
And I think
so. It's been great for the market. Yeah,
from what I'm reading, the extension will be short and sharp. So just be to help with the backlog that we've got now. So looking at sort of maybe 6 weeks extension as opposed to 6 months.
Yeah, I think that's what I've heard. Obviously, you know, we don't know. Well, I don't know anymore at this stage personally. So hopefully, common sense will prevail.
Until we get to the beginning of March and he actually announces his budget, we'll know for sure. But we'll see what comes in March. So Keith's just joined. He's late to the call. Can you do a limited company buy-to-let for an expat? The SPV will only have just been set up. Holly?
Unfortunately not. The expat buy-to-let for us at the moment is only an individual name. So we can consider on an individual basis, but the limited company, we just haven't at the moment. Looking at our criteria, we've not been able to just yet.
It is on our list though. You know, again, just going back to that point of, you know, we want to broaden our portfolio of products in the buy-to-let space. So it is one we've been asked about before. So it is on our product development map.
I think buy-to-let's been the biggest change in products already this year, isn't it? So it's a certain area to watch. It might be worth noting, guys, if you haven't been onto the Saffron from Intermediates website recently, it has had a massive update. There is loads on there. We do keep new products updates on there as quick as we possibly can. We get them up way before they're due to being launched. And there are some product updates coming next week. We can't tell you about them, but they are coming next week. So it's worth popping onto the website, get yourself signed up so you get updates as well. So do that. So Darren, would you do day one remortgage buy-to-let or FMV?
So we won't do a day one remortgage unless it's gone through, it's a case that's gone through a probate. If it's recently purchased, then we would need to wait for that 6 months of ownership before we can consider a remortgage.
Okay. Okay, so from James, if self-employed have taken advantage of any of the government grants or loans, would this affect their ability to borrow?
So actually, no, it wouldn't. So one of the key things that we looked at through the pandemic is that we looked at, how people had been affected, whether they'd been put on furlough, whether they'd taken advantage of the grants or the loans. And it's everything that we do is where our manual underwriting really comes in to shine at this point. It's taking it case by case. With the self-employed, what we're really looking at is if they've taken the loan, what was the reason for taking the loan? Now, we know a lot of people have just had the advice from their accountant to take it because it's good funding, but it's, whether they needed it, how have they been trading in the last 3 months? So it's a real, it's taking that common sense approach, but it's also that manual underwriting that we might need the underwriter to have a look at it and say, yeah, no, I like this, or no, there's something we might need to wait until the next year's of accounts. But and going back to the furlough, I had a conversation with our head of underwriting earlier this week about it, and we were talking about, okay, how do we look at their income, knowing that the scheme is coming to a close, or effectively is coming at the moment. We might see it extended, hopefully not. We all want to get back to normal, as we know, but with that, we can look at their income as what it was on basic, look at what industry that they're working, how likely is it that they're going to go back to work, and actually, we could work off their basic income for affordability rather than their furlough income, but also to look at it as to say, okay, for the first few months, if they are still on furlough, how are they going to afford their lifestyle as well as a new mortgage? So what financial pressure would they put them on? Apologies, that was a bit of a waffly answer, but yes, throughout the pandemic, we haven't really adapted our criteria because we still want to be able to lend to these applicants. Everybody's been affected by the pandemic and we're here to help.
So it's a very valid point, isn't it? You and I discussed this a lot in Saffron's approach to underwriting and looking at every applicant on a case-by-case basis. And I think we've just been discussing it. It was leaked, I say, last night and this morning that it looks like there's been an extension to furlough into the summer. What effect will that have on the market as a whole? I know you guys are case-by-case, but how is it with other lenders? Are they as flexible as you?
No, I think you've got a bit of a polarization. You've got some who have made it clear that they won't accept applicants with furloughed income, and you've got others like ourselves that are saying, because of the way we underwrite, because of the way we operate, which is common sense, we'll take each case on its own value, are not necessarily instantly saying no to these people. Now, I'm not saying we say yes to everyone, because it's about individual circumstances. So I think that's the polarization in the market. You've got lenders saying, no, it's not for us, it doesn't meet our model, we probably won't change that until furlough is finished, etc., etc. And you've got others like ourselves that are very happy to take each case as it comes.
I think going back to your response, Holly, on the grants and loans, because we had, I think it was the last webinar, we had a question. I thought I'd throw it out there again for the newbies on this one. But if they've taken out the loan, not spent it, and given it back, there's no negative effect on applicant there, is there? Because as long as they've given it back.
No, and it was something that raised with the underwriter, I think, as well, Ian really had to think about it. And he's saying, well, okay, if they've taken it and used it, what did they use it for, and what's the repayment on it? Like, how is it working for them? So it's still that case by case. But if they've taken it, they're just holding it there for safekeeping. They could take it back. We just have to factor some things in for affordability. So again, it's that just give us a call, drop us the inquiry in an email, and we're happy to call you back and just chat through it, and really just see where we stand on it and how the customers have been affected.
Brilliant. Just from payment, how many times I've heard this, please bring back 95% LTV, Tony. That wasn't a question.
Well, what I would say is it's not gone for us. It's not a traditional mortgage, but we do the joint borrower sole proprietor first time buyer product, which is at 95%. And we've had that in, we've not ever removed that. And we actually are helping a lot of people that need that help with that particular product right now. It's actually a brilliant product. Should we, just while we're here, just on that, should we have a quick conversation about how the JBSP works? Just so for the people that never been through the process before. Who wants to take it? Tony? I shall pass to Holly to explain it.
I was hopeful on that one, but no. So a joint borrower sole proprietor is part of our first time buyer range. So it's specifically designed for first time buyers who are struggling with an affordability and need a supporter to go on the mortgage with them. So the key things and parts on it is it allows a 5% deposit. And then of the 95% of the borrowing, the first time buyers need to be able to cover 70% of the loan size applied for. And then the supporter then covers the 30% shortfall. So it's what we're looking at is the first time buyer being able to get that 70%, and then the supporters just coming in to help for that very last bit part of the loan size. You're looking at the maximum of 2 first time buyers and 1 supporter on the mortgage, and the supporter needs to be a close family member. But actually the way that we've looked at it is we look at parents, step parents, foster parents, then you've got your aunts, your uncles, your grandparents, foster grandparents, step grandparents. Don't think I've missed any family relations in there. So there's a real mixture of people that we can use, brothers and sisters. There we go. You've missed the important ones. But yeah, and what we stipulate is the term isn't affected by the supporter. So as long as they're no older than 70 at the time of application, we will still not restrict the term to fit with the supporter's age. And that's one of the key things that we've seen as a standout point of our criteria, because the key thing that we are looking at is that the first time buyers, the ability to refinance and remortgage within the next 5 to 10 years as their salary increases and their income goes through as they, go through their career. But the key thing with it is that, again, with the first time buyers, we don't stipulate that they need to be in a specific role. So, a trainee lawyer or that, it's just a normal job. We're just trying to help those people that are struggling slightly with affordability, that have got that supporter that's happy to help them without gifting them. We allow gifted deposits on the mortgage, but if they don't want to, they've got their own savings. The supporter's just there to help bolster that lending. So yeah, it's a great product, and we've designed a joint borrower sole proprietor calculator on our website that takes you through step by step of the calculation. And I know I sound like I constantly say this, but we will help you. Give us a call and say, I'm not sure how to work this through, and we'll help you step by step on the joint borrower sole proprietor calculator. The one thing that we do need is the supporter does need to have independent legal advice, because if they first time buyer defaults on the mortgage, they will be responsible for the payments. But as joint borrower sole proprietor indicates, they'll be on the mortgage, but they won't be named on the deeds.
Just because you mentioned a calculator, flipping back to buy-to-let, just let you know the buy-to-let calculator is also on the website. We didn't mention that earlier. So yeah, if you want to pop on the website, you will find a buy-to-let calculator on there alongside all the others, which are all functional and working. So do pop over to the website and have a look. So from Anish, I have a number of clients buying new build apartments in Liverpool with rental guarantee. What is your take on this? These are new build flats where the majority of ownership is by buy-to-let investors.
That's for us, that's okay. So new build flats, they are restricted to 75% loan to value on repayment and 60% on interest only. And we are okay with rental guarantees. We just need to know a little bit more about the scheme and what they're looking to do. But also there's no set within our criteria of how many can be privately owned and how many can be investor owned. The valuer might comment on it, but it's not necessarily something that we would send out as guidance needed.
Lovely. From John Emmett, will Saffron consider old office buildings converted to flats subject to the valuer's comments? Some are good quality, others have a lorry depot next door. Expats being targeted heavily on these developments.
So, John, yes, we can consider office conversion buildings that have been converted into flats. Again, as you've already identified, it's subject to valuer's comments, so we will look if there's any quirks to the construction, anything along those lines. The ones that are good quality, great, give us a shout. We're always happy to have a look at them pre-submission. The one next to the lorry depot, we might struggle to, but what I will do, John, I do have your details, so I can certainly ask. I'll pop you an email if you send me the details, and I'll have a chat with our underwriters just to see if there's anything, but I think you'd struggle to get that one through, if I'm honest.
Thanks, Holly. So from James, as the loans, we're going back to the self-employed loans now, I think. So as the loans not show on credit reports, do you check the applicant's business accounts for these?
Yes, we do. So we will, as with all our applications, if they're self-employed, they will need to provide a minimum of 3 months business trading bank statements. And then what we would also be looking at is we're likely, due to the pandemic, we will likely go for an accountant's reference. And if that, we will ask questions on there about the business and for the accountant to come back. So with that, we should find out about it and know a little bit more.
Lovely. Going back to the JBSP, we're going to flip around a little bit here from payment again. How would you work out the maximum age on the JBSP?
So the maximum age of the supporter is 70 at the time of application, but the term isn't determined by the supporter, it's determined by the first-time buyer, so they can, again, have up to a 40-year term for that one.
Okay, lovely. From Douglas, if mortgage term is to end after parent's 70th birthday, is proof of future pension income required for the parent?
If they're more than 5 years from retirement, then no. But if they are, we may ask the details during the application process as to what their retirement income projections would be. But it's not a checklist requirement initially at full mortgage application for the initial documents needed. So it might just come through and underwrite with the underwriters to say we might need a bit more information, just as additional comfort, really.
So Douglas, I think that covers both of your questions there, because I was just looking, you popped another question in, so it's absolutely fine. Just going through, I think that's all the questions we've got in so far, so we'll go back to our other ones. If you want to pop another question through to us, do feel free. Chat box on the right-hand side, we will get through them. We're opening up this half an hour to criteria questions as well. So if you'd like to discuss any of Saffron's products and any of the criteria, if we can answer them, we will. And if we can't, we'll come back to you. So if you want to throw any questions at us regarding criteria, let us know. At the end of this webinar, I'll be letting you know about next month's webinar, but also a little secret, little present we're giving to brokers. Rather exciting extra hour in March. So we're telling you at the end. So stay till the end. And also, if you would like a certificate for your CPD, let us know. Drop an email reply to any of the emails that come through the system regarding the webinar, and then we'll make sure we get a PDF certificate sent over for you. We do have those available now. So back to the questions. Ollie, to waffle a little bit and we get questions in. If parents have some adverse, would this be a problem, from James?
Well, yes. So the reason being, they're still assessed as an applicant. So what we are looking at is that they have to meet our adverse policy. So, you know, any CCJs or defaults, we currently have a requirement for them to be settled, and it depends on the value of them, how long they need to be settled for. You know, missed mortgage payments, there can't be more than 1 in the last 12 months and 2 in the last 24 months. Bankruptcy settled for 5 years, IVAs and debt management plans for 3 years, and unsecured arrears, then it's no more than 2 in the last 24 months. Sorry.
No worries. From Manish, what is your minimum loan size and property value? Plus, are you able to accept limited company applications for new build flats?
Yeah, so minimum loan size across our product range. So that's every product that we have is £30,000, and minimum property value is £100,000. We are quite strict with both of those. We won't let them go sort of a pound under. Especially with the property value. So any properties that you're submitting at 100,000, we're cautious in case they do get down value by just £1, we will not be able to consider. But yes.
Brilliant. Going back to, we've answered this question, so I'll give you the answer. So expat buy to let, can it be first time landlords? The answer is yes on that one, and first time buyer. Just moving over on first-time buyers, because we came back into the market with 90%, and we did a lovely little update just a couple of weeks ago. Should we just talk about what those updates were, Holly?
Yeah, so the first-time buyer product is available at 90%, and we offer that with no arrangement fee and free valuation. There is a £180 non-refundable application fee, but that our first-time buyer definition is somebody that's never owned a property previously. And yes, it's available to them, and if they fall within policy, so if they've got a slight bit of adverse, the default that's under, I don't know, under £100 and been settled for 6 months, and those are the kind of things that we can consider. It's the ones where it's quite high adverse, or a large debt to income ratio, or signs of financial pressure. They've taken a payday loan in the last 12 months, that kind of thing. We will be a bit more cautious on, but it's just we felt it was the time to come back at 90%. We'd already had it in, but we thought, let's make it a bit more competitive with the fees and the free valuation. And also we thought the other bit that we launched on the 90% is for our home movers, for those, so the second time purchasers that have got, the 10% deposit now with equity that they can move over. And both of those are capped at 500,000, but we can consider if it's slightly more, we'll just do that on a bespoke basis. So, many of you know we do offer bespoke pricing on the cases that just don't quite fit. If it's a good case and it's one that we're happy to take a view on it or something, we'll chat to our underwriters and then we can offer a bespoke pricing. So, for example, if they're looking for £550,000 on a 90% loan to value mortgage, yes, that is outside of policy, but with the bespoke pricing, we'd hopefully be able to help.
I think while we're talking about flexibility and case by case, it's worth noting that for self-employed as well, because this year has been a nightmare for them, but it may have only been, again, I suppose it's down to the sector they work in, isn't it, Holly? Because it may be they had a slight drop, but as you bounce back, midway through last year, it's just that first initial couple of months where everyone panicked as we entered the pandemic. So, there is opportunity for self-employed still, isn't it, Holly?
Yeah, there is, and I think, it's that case by case. We'll go to the accountants, we'll ask questions. Well, we don't ask the accountant for a specific number that we think the customer's going to reach. We're asking them, do you think they're going to be operating at the same level, if not more profitable in the year ahead? I had a lovely conversation with one of our brokers this morning, and we were talking about, how people have diversified. They might have a shop high street presence, but during lockdown, they've then moved to online, and actually they're doing better than they've ever done before. So, people, the great thing about lockdown, although it's tested us all, I'm sure, but it's, people have been able to diversify and do those changes and be able to look at different ways that they can operate, because at the moment, we're nearly a year down the line. This is the kind of new normal, and it scarily probably we won't be going away for a bit longer. So it's looking at them, looking at their trading accounts for the last 3 months as their business bank statements, and thinking, okay, what can we do? And I know that one of the key things that we did with our self-employed is have a look at how they're trading, but also what our system can take. So our system was built to always take a 3-year average of an applicant's self-employed income, but actually now we've made some slight changes. So if there's been a year-on-year increase in your self-employed figures or a year-on-year decrease, then we'll take the latest years as our system. And if there's been any fluctuation, then we will look at an average. So that's the small change that we've made to really help and say, right, okay, we feel comfortable to look at the latest year's figures. So, that change came back, was it pre-Christmas now? I think.
Yeah.
Yeah. It was.
Yeah, it was. Yeah.
So yeah, and as well, we made it clear that for 100% limited company directors or applicants that are 50-50 and both on the application, in certain circumstances, we can look at the net profit after tax and salary figure for affordability. So, and we came out, pre-Christmas pretty strong with that message to say, look, we're here to support, and this is how we could potentially support your self-employed applicants. And we also went on about our contractors. So, we made our policy really clear on CIS contractors. So, we now look at the CIS workers we've always looked at, but on our contracting product range, and we've made it really clear on how we look at their income. So we'll look at the P60 figure. But if there's no P60 available, then maybe started after the P60 date, then we'll look at a 6-month average of their pay slips to work it out. So, we just want to be as transparent and helpful as possible during what has been a turbulent 12 months.
And also, credit to you as well, because as everyone knows, I don't work for Saffron, so I'm independent, but credit to you as well for how you looked after your customers during, so those that have a mortgage with you, and how you dealt with them during last year. I think it's commendable, because the support and the thought, and again, the case-by-case thinking, rather than just offering, you know, loads of banks going out offering payment holidays. It was a big conversation with you. It was such a personal approach for every single member, which I think needs to be commended. And it just proves that once you're in the door, the service level doesn't drop. You still maintain the management there. So credit to you guys on that. That's from me externally. So from Zoe, 90% of a joint purchase, do both applicants have to be first-time buyers to qualify?
So this is a slightly difficult one, because somebody that's a first-time buyer and somebody that's a home mover kind of doesn't quite fit the product. However, this is the one where we need our underwriters. So we say apply on the first-time buyer product because you have a first-time buyer on the mortgage, and then to highlight it to the underwriters, highlight it to the BDM team, and we just need to know on that one. It's just how we find the product. It's not doable because the products are variable there. It's just not quite a product that fits them both at the moment. So it's one of those ones we'd have to mould together.
Okay, from Charlotte, this coming in while we were having a long chat about flexibility. Would you consider retained profits?
Yes.
Nice short, sharp answer there, Charlotte.
Yes, sorry. It's the easiest one I've done today.
I was really waiting for more. I was there's some more coming. Brilliant. Let's go and have a look at some other products. Something we discussed last year on one of the webinars that fascinates me, and is a growing area in the UK, where it's been quite positive in other countries, and that's self-build. One thing that, as a specialist lender, you are really, really good at. So when we have a look, talk about the self-build product and what that is. Holly, do you want to go with this?
Yeah, of course I can. So for our self-build, it's one of my favourite subjects, so we're fine. I've probably nattered and chew everybody's ear off for a long time on this one. So it's available to first-time buyers as well as home movers, and it's really, we're helping that customer build their dream property, and we can take on the majority of type of projects. So we can look at from the ground upwards, where they've got full planning permission. We can look at knockdown rebuilds. We can look at full conversions, basement cutouts, or barn conversions. And the benefit with our product in something, we do it all in-house. We have an in-house underwriter that looks at all of the self-build applications, and we look at a variety of different modern methods of construction. The key things that we say, as long as they're BOPAS, BBA or BRE accredited, then we're happy with them. It just finds out a little bit more about them. They do need to have 65 years within their buildings guarantee, is the key stipulation on that. So some of them, or even if they are BOPAS accredited, sometimes have less years available as a warranty and guarantee effectively. And again, it's just running it through with us. We take on everything from your new timber frame properties to your modern steel frame with, a nice sedum roof kind of thing. So it's all those different ones, and, we're happy to chat it through. We can look at the ones from just your standard, 2 up, 2 down, to those grand design desk ones that are great. And the key things is, as long as they have the right warranties, it fits affordability, then, we're happy to consider. One of the key things that we would say on the self-build is that, once they complete, we will keep in contact with the customer. So for the duration of the build, they might have stage payments throughout with their build costs, and we will keep in contact every 3 months. So if they, because all our build costs are lent in stage payments and they're lent in arrears, we might not hear from them from 6 to 9 months, but actually we'll contact them on month 3 and say, hey, Mr. and Mrs. Smith, where you're at, and what you currently, where is the building at, how are you getting on, and that kind of thing. It's just part of our customer service. We like to be hands-on from start to finish. We have 2 products available. So we have our cheaper rate product at 3.99, which is a 24-month discounted rate product, is available at 65% of the purchase price, up to 100% of the build costs, and cannot exceed 75% of the gross development value. And our 4.19 24-month discounted rate product is available at 80% of purchase price, 80% of build costs, and 80% of gross development value. Again, the build costs are in stage payments and in arrears. The stage payments are flexible and they suit the applicant's needs. So we don't stipulate its foundations, eaves, levels, things like that. It's flexible, and we'll take on projects because, you know, we will take on projects midway through. You know, they're running out of funding and need to draw some equity out of the land. We may request a quantity surveyor report in that instance, but it's just to find out what they've done so far. So, you know, it's not just your starting from the ground. And, you know, it's a variety of different plots, and that's throughout England and Wales as well.
Brilliant.
I'm up for air now.
Oh, she's still going. She's still going. James, some questions. We're going to go back to the definition of a first-time buyer, as James wants a little bit of clarity. So, is your definition of a first-time buyer somebody who has never owned a property, even if it may have been, say, 15 years ago?
Yes, they've never owned a property previously. So, yes, and one of the things as well on our residential mortgage is if the applicant has a larger deposit, so if they have 80% or below and they're a first-time buyer, they can actually go on our residential range, so they can get a slightly cheaper rate if they've got a larger deposit as well. And our deposits can come from a variety of different sources. It can be their own personal savings, it can be immediate family gifts, and it can also be, we do also accept deposits in the form of a loan. We just need to know the amount, the lender, and what the repayment strategy is on that.
Lovely. Forgive me, I've not had this abbreviation before, so I'm just going to read it out. What's your current ITI, and do you cap this dependent on loan to value, and if any applicants are self-employed?
Yeah, so we work off affordability as standard, but your rough income multiple, you're looking about 4.49 times. But the affordability calculator is the one that our underwriters use in the background. So it should give you a relatively accurate lending figure as to the same as what they would get. We can look at 5 times income in certain scenarios. So the application must be 80% or below. The income must be a minimum of £50,000 from a sole applicant or £80,000 from a joint applicant. And the loan size must be over 300,000. That's our stipulation for the basics to be able to look at a 5 times income multiple.
Lovely. This is a complicated one. Jeff from James, how would parental gift of land be treated?
That's fine. We can consider land that has been gifted to them. What we do need to see is ownership of the land on land registry. So that'll be the key thing for us, is to see that they are now the gift, they will own the land on completion. And what we can do as well, I did miss out on self-build, is that we do allow initial planning permission at decision in principle stage, but we can't go to valuation without full planning permission being granted. So it slightly hinders a purchase if they've got initial, because we won't be able to complete until they've got full planning permission. But you know, the key thing that we say, and the real benefit of using Saffron for self-build is that we do it all in-house. You'll be dealing with our underwriters, and you know your customer will be looked after during the build as well.
Brilliant. Holly, we mentioned it very, very briefly, but I think it'd be a good idea to bring it in at this point, since we're talking about self-employed, and to talk about contractors, because you changed some of the details last year. Do you want to explain the contractor product and how it works?
Yeah, so the contractor product is for anyone on a short-term or fixed-term contract. It's available up to 80%. And our criteria around it is they must have 2 years industry experience. They must have 3 months contracting experience. They will require 1 month in their existing or new contract, and there should be a reasonable time left on the contract as well. The way that we look at their income is we'll look at the day rate times the days work times 48. And the good thing about the contracting product is it doesn't mean that they just have to be on one contract. So, for example, we understand that people working within the film industry or within television, they have multiple short-term contracts. So we can take, you know, multi-contracts at the same time. We just help work out on affordability, and we'll work on that 48-week calculation as well.
Brilliant. We had about 7 people join us after we discussed the limited company buy-to-let. So I think, just for the sake of the newbies that arrived a little bit later, should we go through the product again, Holly? Just really briefly, just go through what's required. So some of the points we mentioned earlier were, you know, the registration certificate didn't need to be X amount of time. It could be yesterday. So maybe just talk through the product in very brief form.
Yep, so limited company buy-to-let is available at up to 75% loan to value. It's available to first-time buyer, first-time landlords, and we have a minimum income of 25,000. We have no set stipulation for how long the SPV or limited company needs to be set up. However, it must be set up with the sole purpose of holding property. If it is a newly set up SPV, we will need to see the certificate of incorporation. And if it's been running for more than 18 months, we will need to see the first years of accounts. We require all shareholders to be named as directors, and the maximum number of directors is 4.
Lovely. And we had the conversation regarding minors being shareholders as a way of gifting to children older. Not acceptable, the minors. Is there a way around that?
Removal of them as a shareholder, or a newly set up limited company. We as I mentioned, for us it's keeping it that simple structure, so that's what we're looking for. And our criteria and our policy is very strict that all shareholders must be named as directors.
Okay, a couple of questions coming in. I think some people are just coming a bit later and we missed some of the earlier ones. So how do you assess self-employed incomes? Do you average the last 2 or 3 years, or use the last year's income? I think we've talked about this, but can we just review that again?
Yep, so if there has been a fluctuation over the last 3 years, we will use a average. If there has been an increase year on year or a decrease year on year, we'll look to take the latest year's figures, as our system would automatically take that for you. If the applicant has 3 years of accounts, they're eligible for the standard residential products, but if they have less than 3 years, they do need to go on our self-employed product range, which is available on the website under the special situations mortgages, and it is available up to 80% loan to value. Lovely.
Is there a maximum number, this is from James again, is there a maximum number of properties that can be held either with you or in the background?
So any borrowing with us on a buy-to-let basis, the maximum number is 10 properties or £1.5 million worth of borrowing. And for the background properties, they can have unlimited in the background, but they must have a coverage of at least 125% of their pay rate, both individually and collectively. And we are updating our website and our portfolio landlord documents to then state that you can download it in an Excel format and it will have the right calculation on there for you, so you can just transfer data in. We do like, with the property portfolio form on submission, that it's within our format, because it has all the required information that we need. So I know a lot of people already have it on a background document, but we do need to see it transferred into our portfolio form.
From Roy, do you take a debenture with a floating charge?
On that one, Roy, I will have to take your details and come back to you, because I wouldn't be 100% confident on that answer.
Right, if you send a message, you can send it privately, it just comes to me. Send a private message with your email address and I'll pass that on to Holly, and you can have a conversation away from the webinar. We've only got a few minutes left, so I'm going to take the chance to let Tony talk for a little while and give Holly a little bit of a breather. So firstly, let's just talk about slow applications. We've had a lot of conversations about this over last year, obviously during the pandemic, as applications really started to slow down. Have you seen some improvement in the application speed over the last few months?
Yeah, we have done a lot, and we've got more to do. But our real focus for this year is about service that stands out. It's a real corporate driver for us to deliver a level of service that ultimately makes us easy to do business with. So you're not having the issues that we have experienced in the past, and experiencing with other lenders, I'm sure as well. So we're doing an awful lot, and have done already, to remove excessive requests for documentation. So we've already reduced the level of bank statements that we require. We're looking at how we can use greater electronic identification and verification documents, to stop having that stuff to be uploaded. So that's coming soon. We're clarifying the data that we need on some buy-to-let portfolios as well. Holly's mentioned we're making it easier with the Excel version. So yeah, we've got a long way to go still, because we're not at the service level that we'd like to be. I mean, we are at the moment reviewing dips within 2 to 3 days. and we're reviewing all applications, brand new ones, within 5 days. So, you know, we look at the market in general, we're not bad, but we're not happy with that. We'd like that to be sooner as well. And actually on that front, we are actually now in the process of increasing the underwriting resource as well. So we're growing our underwriting team to enable us to be able to go faster and take more business as well. You know, we've reduced some of the things within our system as well. So a lot of cases used to refer at decision in principle for us to have a check. Where possible, we're removing that now to make it faster and quicker and easier. We're changing our valuation instruction process as well, and all this will come out when it's finalised. So big focus for us to be easier to do business with.
And a couple of new faces that the brokers might get to see too, apparently, in time.
Yes, we're growing the BDM team as well. So Holly mentioned that we've grown the numbers on the telephone team by 2 since November, and I've got 2 BDMs starting next month, which is great. And we look to grow that team further. Feedback from, you know, the surveys we do told us that they wanted to see and hear more of us. So one of the key things there is about getting more resource on the ground to help that happen and bring Saffron to life for people, because our proposition isn't easy to articulate in a marketing document or on a website. It needs us to explain it to you, because there isn't a right or wrong answer with us. We'll look at anything. We'll make it clear what we do and don't like, and that's within our lending policy. So let's not say we'll just look at anything, because we won't. But if it meets our policy, or actually it doesn't quite, Holly's mentioned we can bespoke rates, we can bespoke stuff. That's what we do. We're here is to support any customer that needs a specialist lender and the thought process of a specialist lender. That's what we're here for.
Brilliant, thank you. Roy, just so you know, I've received your email address. I'll pass it on to Holly. Right, so in the last few minutes, it's time to talk about what's coming next. But Holly, before that, do you want to give out your email address for your team and the telephone number?
Yeah, so our email address for the team is bdm.inquiries@saffronbs.co.uk, and our telephone number is 01799 582 925. So is that 01799 582 925? I nearly gave you the processing team's number. But what also, if you have missed that, we do have a contact us section on the website, so all the details are on there with some useful telephone numbers, and also there is a inquiry form that you can submit. So you can use that online form. That will come directly to us via email, and we can pick up and respond from there as well. So we are hoping that to expand on the contact strategy. We, as Tony mentioned, we have 2 new staff, and we're hoping in the near future we also have a live chat function. So there'll be multiple ways for you to get in contact with the team and get your questions answered nice and quickly. So we're hoping that will be next couple of weeks we'll have that live.
So James, I haven't received your email just yet, but if you wanted to email Holly, that's the best way to get through. Again, just go through the website. All the contact details are on there. I would say the website, got the calculators, had a nice updates, got some new news pieces on there and things to find out about Saffron. So if you haven't been on recently, definitely worth the trip and get yourself signed up. Right, now let's talk about next one. So we're back again on the 19th of March. And our focus for SFI Live will be development finance. So we're going to be joined by Peter Owen, who is the head of development finance at Saffron. So he'll be joining us next month. So again, 11 till 12. I will send a link out to you by email, but you can register it almost immediately. It is up and running, so we can get that out to you straight away. Following that, I'm not allowed to talk in detail as yet. We have a special broker online event to meet somebody you might recognise. Really hard to keep this secret. 12 to 1. Obviously, that won't work towards your CPD, but it is a really good bit of fun. It's away from talking about products and everything else. So Colin, the CEO, is going to be joining Tony and myself on a platform with some other people. So that's all we're going to say for now. But if you register for the 19th of March for the development finance, you'll automatically get registered for the hour afterwards. And very shortly, it won't be very long, very shortly we'll announce what's going on that. So from all of us, it's 12 o'clock, that's our hour up. So thank you so much for joining us. If you did want the certificate, drop us an email and we'll get that sent over to you. Otherwise, we'll see you on the 19th of March. Thanks, Holly. Thanks, Tony. We'll see you soon.
Thanks, Jay. Thanks, everybody. Have a good weekend.
Bye.
Take care. Bye. Bye.